Welcome to ChinaTalk. It is a series of interviews with leading global experts on the economy and politics of China and East Asia. The series is produced jointly by the Polish-Chinese Business Council and SWPS University, Warsaw, Poland. It is hosted by the president of the Polish-Chinese Business Council, Mr. Zbigniew Niesobędzki, who is here with me, and myself, Marcin Jacoby, head of Department of Asian Studies, SWPS University. Today, in the second interview of the series, we have a very special guest, Mr. Tom Orlik, Bloomberg's Chief Economist, based in Washington, D.C. Tom is a graduate of University College London and Harvard's Kennedy School of Government. He has worked at the British Treasury as a policy analyst. He has also worked at the International Monetary Fund. He spent 10 years in Beijing as Chief Asia Economist for Bloomberg, but also as economic correspondent for the Wall Street Journal. He also published many articles in other media on China and financial topics. He's author of two books, Understanding China's Economic Indicators, a book published in 2011, where he focuses on discussing the reliability of Chinese statistical data and analyzing 35 main economic indicators. And a very recent book, China, the Bubble That Never Pops, Oxford University Press, published just 2 months ago in June 2020. It's our great pleasure to welcome you and have you with us, Tom. Thank you very much for your time. And now I will be a moderator for the discussion, so I leave the floor to Zbigniew and to Tom, and I hope you have a great discussion on modern China.
Hi, Tom. I'm very pleased to welcome you and thank you very much for accepting our invitation to ChinaTalk. So I would like to start with your new book, China, the Bubble That Never Pops. First of all, I would like to congratulate you on your new book. In my opinion, it is one of the best books on China in the last few years.
Well, thank you very much, Zbigniew. It's great to be here, and thank you also, Marcin, for that generous introduction. Really looking forward to it.
Thank you.
Welcome. This publication is your next book about China. You have spent many years in China. Where did your fascination with China came from?
So I have to be honest with you, Zbigniew. I did not have a master plan to become a China expert. When I was a younger man, my girlfriend, who's now my wife, and I were living in different places. My wife lived in Washington, D.C. I lived in Brussels at the time. I was working for the European Commission. And I said to my wife, which country outside America and Europe would you like to live in? And my wife said China. So in 2007, we moved to China, and it wasn't a plan, but it was a lucky move because 2007 was really when the world's attention started to shift to focus on China, especially the economy where I work and the environment and energy, which is my wife's area of expertise. So for 11 years, in Shanghai and Beijing, we found ourselves right at the center of this really fascinating place with the eyes of the world really on what happened in the Chinese economy.
Okay, so China, the bubble that never pops. First, I would like to ask you, what are the main threats and challenges to the Chinese economy that you can identify? And can we rank these threats according to the probability of the recurrence of the scale of potential consequences for China and the rest of the world?
Well, that's a huge question. It's a great question. So maybe I could just take a step back and talk about sort of part of my motivation for putting pen to paper for my book. So I was in China for 11 years, and I'm sure both you and Marcin have spent a lot of your time thinking about China as well. And so you'll know that the Western story on China especially the US story on China's economy, is always a story about weakness and failure and collapse, right? From the 4 trillion yuan stimulus, which Premier Wen Jiabao introduced in response to the great financial crisis, there's been this long-running narrative that China's economy is weak, right? The headline growth number looks impressive, but if you poke beneath the surface, it's all financed by debt, and all of that debt goes to low-quality borrowers, the zombie state-owned enterprises, the real estate developers building ghost towns in the desert, the local governments building roads to nowhere or lavish offices which they don't really need. And so we tell this story about a Chinese economy which looks superficially impressive, but where the growth model is fundamentally unsustainable. But as we continue to tell this story, China's economy continues to grow, China's wealth continues to rise, China's influence continues to expand, and the collapse of China is always sometime in the future, right? It never seems to arrive. And so when I put pen to paper for my book, I was trying to answer the question, why? Why does China's economy continue to defy the doubters? Why is the model more sustainable, more robust than we give it credit for? So there's a bunch of problems, and you asked which the most important problems are. So, I mean, I would start with debt, right? China's economy has a huge amount of debt. And then I would break that down. And on the borrower side, I would be concerned about debt or lending to state-owned enterprises, which have very low efficiency. I'd be concerned about lending to the real estate sector, which has significant overcapacity. I'd be concerned about lending to local government, who make lots of wasteful infrastructure investments. And on the lender side, I'd be concerned about small banks, city banks like Baoshang, which went bankrupt in 2019, or shadow lenders. But the big story in my book is really that, yes, these are all problems, but we overstate them. The problems are real. They're just not of sufficient scale to knock China's economy over.
Yeah, your book is bad news for all China bears who predict, of course, imminent collapse of Chinese economy. Yeah. So you said in one of the previous interview that the original sin of China's economy and its unbalanced growth model is extremely high savings rate. On the other hand, having high savings ensure the stability of Chinese banking system. How do these two seemingly contradictory facts be interpreted?
Yeah, so that's a great question. China saves a very high percentage of its income. More than 40% of China's overall income is saved. And that's an extraordinarily high number. In the US, it's kind of saving is in low single digits. So why is that? Well, a big reason is the one-child policy, right? So as I'm sure you know, if you have children or others who have children would know, if you have a child, it costs a lot of money. You spend money on education, on clothes, you buy a bigger house, and you save less because you hope the child will look after you, or your children will look after you a bit when you grow older. In China, because they have the one-child policy, there's less need to consume because they have less children, and there's more need to save because there's only one child to look after each family as they get older. So China has this extraordinarily high savings rate. Now, if you have a high savings rate, you've got a problem. You need to turn that saving into demand, or you're going to face a slump in growth and weak employment. So China does that by having the saving turn into bank loans, which turns into investment, right? So the high savings rate is the origin of China's unbalanced growth model because it requires China to do a lot of investment in order to keep growth on track. But as you mentioned, Zbigniew, it is also a source of stability for the banking system. If the savings rate is high, then the banks will always be able to rely on more deposits, more funding. And if banks have stable funding, then even if they make bad lending decisions, even if they're making loans to companies that make bad investment decisions, they have a kind of a basis for stability. And that's why you have this sort of slightly strange situation in China, which looks very dangerous, but is actually something which is closer to an equilibrium.
Mm-hmm. So you mentioned that debt as maybe the main threats of Chinese economy. Yes, I want to ask you about the leveraging agenda launched in July 2017 by President Xi and led by central bank. In that time, the total debt was 260%. The main purpose of the mechanism was to radically reduce the size of this debt. But in the last years, the annual growth of the new debts was bigger than the GDP growth. And in the first quarter of 2020, according to the Institute of International Finance in Washington, the estimated total debt hit 317% of China's GDP. What went wrong that this debt has increased so significantly in this time?
So let me just take a step back and talk about China's debt problem. So in 2008, China's debt to GDP ratio was about 140%. In 2016, it was 250%. So there was a massive increase in debt in a short period of time. And when we look around the world, we can't actually find any other countries that took on as much debt as China as quickly as China. But we do find a number of countries, the US ahead of the Lehman shock, European countries ahead of the European sovereign debt crisis, Korea and other Asian countries ahead of the Asian financial crisis in 1998 that took on a lot of debt, less debt than China, but still had a financial crisis. So people look at the situation in China where even more debt has been taken on, and they say, okay, this cannot end well. There must be a financial crisis coming for China, just like there was a crisis in the US in 2007, 2008, a crisis in Europe in the European sovereign debt crisis, and so on. Now, China's leaders also see the same problem, right? They look at the same data, they see the same problem. And so in 2016, 2017, Liu He and then Xi Jinping signaled an aggressive move against the problem of high leverage. They announced the deleveraging agenda that Zbigniew just mentioned. Zbigniew mentioned it in the context of kind of failure. I have a different view, and I'm actually slightly more positive on it for a number of reasons. So the first one is China's leaders did something, right? If we think about the US in 2005, 2006, there were no senior US leaders warning about the problems in the mortgage market or the subprime mortgage market or mortgage-backed securities. If we think about Europe in the run-up to the European sovereign debt crisis, yes, there was a few people who were sort of flagging the risk, but no one was aggressively moving to try and address the risk. So the first thing I think is positive about China's deleveraging agenda is just that it existed, right? At the top level of the government, Xi Jinping and Liu He said, look, this is a problem. We need to address it. So that's important. The second thing I think is important is that they didn't solve the problem, but they moved to address some of the most significant sources of risk inside the financial sector. So in particular, shadow bank lending. That's probably the riskiest bit of the financial system. That's banks which are too small to be safe, growing too quickly, and without a sufficient capital buffer to absorb their losses. Shadow banks were kind of one of the riskiest bits of the financial system, and the deleveraging agenda significantly addressed the problem of shadow banking. Growth in shadow banking went from very, very quick to no growth at all to actually a slight contraction in the shadow banking sector. And then if we look at the overall leverage ratio, if we look at the overall debt to GDP ratio, as Zbigniew mentioned, it doesn't come down, but it does stop growing. And that's a significant achievement as well, I think.
Yes, you mentioned the shadow banking system. It was and probably is used to hide the bad debts. Yes. So the trick has a long tradition in Chinese financial system. For example, I remember when Henry M. Paulson Jr. writes about it in his book Dealing in China, by the way of the IPO of Bank of China and ICBC. Yes, what was in their book accounts before the IPO. Okay, so, but you interpreted this fact in the longer period. Maybe I want to ask you, because the financial system in China has undergone significant changes over the past 40 years. You divided this period in your books into 5 cycles. What milestone would you highlight in this process?
So, I think most people think about China as having an unbroken growth trajectory from the beginning of Deng Xiaoping's reforms all the way through today, right? And it's certainly true that China from 1979 onwards has had a long period of rapid growth, right? But if we look at a bit more detail, what we find is actually China has been through a series of cycles which begin with a significant reform or innovation or crisis, which catalyzes a new period of growth. So I divide it into a number of periods. The first one starts with Deng Xiaoping's reform and opening. The second begins with Deng's southern tour. The third begins with the cluster of events around the Asian financial crisis, the closure of the state-owned enterprises, and China's entry into World Trade Organization. And the fourth begins with Wen Jiaobao's response to the great financial crisis. So I make the argument that we're now at the end of the 4th cycle, the beginning of the 5th cycle, as China attempts to deal with the legacy of high debt that followed from Premier Wen's response to the great financial crisis, and also find new drivers of growth. So one of the significances of this way of thinking about China in terms of different growth cycles is that it introduces the idea, or it reinforces the idea, that problems in China are not new, right? And you hinted at this, Zbigniew, when you mentioned the Hank Paulson book, Dealing with China, right? So what was Hank Paulson looking at when he looked into the balance sheet of ICBC and the other Chinese banks that he helped IPO at the beginning of the 2000s? Well, he was looking at a banking system which had a lot of loans to inefficient state-owned enterprises, had a lot of hidden bad loans, had a lot of inefficiencies in its decision-making process. And those are actually pretty similar to the problems which people found when they looked into the banks at the end of the 1980s. And they're also pretty similar to the problems we see when we look at the banks today, right? And so the point which I make, or the point which is implicit in that, is that these are chronic problems, but they are not catastrophic problems, right? They are chronic, they are there all the time. But because they are there all the time, we should also have some kind of comfort that they do not knock things over, right? I feel slightly tired every Monday morning. That does not mean I'm about to die from a heart attack, right? Similarly, Chinese banks have a perpetual problem with loans to inefficient state-owned enterprises and hidden bad loans. That's a perpetual problem that they're continually managing. it does not mean they're about to fall over.
Now I would like to ask you about China's foreign debt, maybe less recognized by the public. What is its scale and who owns this debt?
So this is money which China has borrowed from overseas. So the Achilles heel, the sort of the killer weakness of many emerging markets has been borrowing from overseas, right? So China's neighbors, Korea, Indonesia, other countries which fell over in the Asian financial crisis at the end of the 1990s, they fell over because they borrowed from overseas. And when the foreign investors pulled their money out, their economies collapsed. Mexico and other Latin American countries, in a series of crises over the 1980s, 90s, 2000s, and even today, their problem is they borrow from overseas, and when the foreigners decide they don't like the risks and they pull their money out, they trigger a collapse, right? China is different. China has run a strong current account surplus for decades, and that means that China is, by definition, a net lender to the rest of the world. And that is one of the reasons why I see stability looking forward in China's economy and financial system, because they're borrowing a lot of money, but they're borrowing it from themselves, right? And that is inherently more stable than borrowing from overseas. Now, as you mentioned, Zbigniew, there is a problem of some parts of the economy increasing their dependence on foreign borrowing. So in particular, there are some corporates, some real estate developers who issue bonds in US dollars. And so they are subject to not just the risk that foreign investors disappear, but also to exchange rate risk. If the yuan depreciates strongly, it will be harder for them to repay. So there's a particular problem for some sectors and for some companies, but at the economy-wide level, I think the relatively low level of borrowing which China does from overseas is actually a source of stability and strength.
Okay, so I want to ask you about Chinese economy. Of course, not forgetting its huge challenges, as mentioned by you. In my opinion, China still has the great growth reserves. The service sectors accounts for about 20% less GDP than in developed countries. Despite the already multi-million middle class, the average household income is less than 30% of that in the United States. Yes. There is a huge room for improving productivity, especially in zombies companies, and so on. You write in your book that China still benefits from the advantage of backwardness. Yeah, you agree that this potential of growth is still high in China?
Yeah, it's clearly not as high as it was, but I think there's still significant space to grow. So the way I think about it is like this.
Because a tree cannot grow to the sky.
A tree, exactly. 树不能长到天. Okay, so let's think about the comparison between China and Japan, right? So when did Japan's economy go to sleep? When did Japan enter its lost decade? Well, that was in 1989, and Japan's GDP per capita was 85% of the level in the United States. So Japan had already caught up to the technology frontier and diffused that technology broadly across the Japanese economy. So standards of living in Japan were basically the same as in America. Now, where's China? Well, as Zbigniew mentions, China is at around 30% of US GDP per capita. So if we look at the leading Chinese firms like Tencent, Alibaba, Huawei, yeah, these are productive firms. They're at the technology frontier. But an average GDP per capita, which is a third of the level in the United States, tells us that there are many sectors where China is still got a lot of space to catch up to the productivity frontier, and a lot of sectors where leading edge technologies still need to diffuse from the top firms to the catching up firms. And so to me, what that suggests is at least the potential for a decade, 2 decades of relatively rapid growth ahead for China. Yes, there are some significant problems. The demographics are more negative now. The working age population is shrinking. The world is more hostile now. We look at US attitudes to China. Clearly, they've become more hostile. Europe is becoming more cautious. So there are some significant problems. But if we look at just raw potential, clearly it's still there.
You mentioned the Chinese relationship with the other countries. Maybe I would like now to talk about Sino-American relations. China has been dynamically developing since the time of Deng Xiaoping. China became the world's second economy 10 years ago when surpassed Japan. Okay, so the U.S. deficit in trade with China has always been high, although it has grown steadily in recent years. So why the U.S. just now taking such radical action against China? Did China announce Belt and Road and made in China 2025 programs force their hand, or do you think there were other reasons?
Yeah, it's a great question. So I think there's a cluster of concerns in the United States, right? And there's a set of concerns around behavior, right? So forced technology transfer, IP theft, cyber espionage. These are some of the charges which the US Trade Representative has leveled against China. At the same time, I think it's fair to say that there's a kind of concern more broadly in American society about China overtaking, right? What happens when China's economy is the biggest economy in the world? And if you put these things together, the concerns about specific practices, market access, joint ventures, intellectual property protection, and that visceral concern about what happens when the US isn't the biggest economy in the world anymore, then that's kind of what's driving this significant change in attitude in America towards China's rise.
If I may add here, because it's also interesting to spend 2 minutes to think about whether it's all sort of Trump-driven change, because many of the things that you mentioned were things that were already present before. So is this sort of a Trump moment which changes American policy, or is it something that would amount to such a decision regardless of who is the president of the US?
Yeah, it's a great question. I mean, I think my feeling is that the Trump administration has been, in some respects, fairly extreme in their approach and attitude to China. But I think we will also look back and identify this as also a moment where American opinion is changing and the trajectory is changing. So I think that I think we might look back at this period and see, yeah, this was a kind of an outlier, but it also marked a change in the trend.
So the US goals in the tech, trade, and financial war with China seems obvious. Often when listing the benefits that can be achieved in this war, the associated costs are forgotten, and they will probably be significant, and will be paid, of course, by us, society. Yes, at least in the short and medium term. Let's try to list this cost for us, for economy.
if we move towards a more sustainable trade relationship between China and the US, a relationship where there is enhanced market access, enhanced protection for intellectual property, then I think that would be positive, right? There's potential here for a long-term improvement or a long-term win. At the same time, clearly, if tariffs are going up, clearly if sanctions are being imposed, clearly if uncertainty is increasing, then there are some specific short-term costs. 2018, 2019, there was certainly a fraction of a percentage point shaved off Chinese and US and indeed global GDP because of the trade war and the uncertainty that provoked. Looking further forwards, I think there's an important question, which is, what type of world are we going to live in, right? Are we going to live in a world where there is kind of more or less a return to trend in terms of commercial relations between China and the rest of the world? Or are we moving onto a kind of decoupling trajectory where the US and other European countries start to be much more cautious about their attitude to China and say, no, we're not going to have trade in these sensitive areas. We're not going to have mergers and acquisitions in these sensitive areas. We're not going to have research exchanges in these sensitive areas. If that happens, then actually that's a cost to long-term growth as well, because it's these kind of exchanges which drive improvements in productivity. And it's those improvements in productivity which sort of at a very fundamental level are what drives long-term growth.
Mm-hmm. So maybe the question about the yuan as a world currency and its rate being shaped by the Chinese central bank. The US administration often accused China of manipulating the renminbi exchange rate. Are these obligations, in your opinion, justified? And how important are these elements for improving the competitiveness of the Chinese economy?
Yeah, it's a great question. So if we go back to 2004, 2005, and we will remember what people were talking about then, the main concern people had about China was the exchange rate, right? The IMF, the US Treasury, they all complained about the Chinese yuan because it was undervalued and it was managed closely by the government, and that gave China's exporters an unfair advantage in the global economy. And it was a significant source of distortions, both for China and for the rest of the world. Now, what's happened over the last 15 years? Well, cautiously, gradually, incrementally, China has reformed its exchange rate mechanism, right? So now the yuan is close to fair value and is set by the market rather than by the PBOC. So that's not been a completely smooth process. There's been some very significant costs. Some people would say the great financial crisis was a cost which came from China's management of the yuan and having an undervalued yuan for too many years. But over a period of time, those problems have been addressed. So taking a step back from the exchange rate, I would say one of the stories we tell about China's leaders is a story about economic reform failure, right? We talk about Hu Jintao being too much of a committee man, too consensus oriented to get things done. We talk about Xi Jinping being too conservative, too state oriented to get things done. Actually, I think that story we tell about reform failure misses some important things. And on the exchange rate, certainly I think it's more a story of reform success.
So recently, information has emerged indicating that the next step in the trade and financial war between US and China may be China's exclusion from the dollar settlement system. The Chinese response to this situation is more common use of yuan in cross-border transactions and the implementing of digital yuan. For example, in bilateral trade between Russia and China, US dollar accounted only for 46% of total dealings in first quarter this year, down from 90% in 2015. What this exclusion could mean for the global financial order, Chinese economic stability, and for ordinary companies that do business with Chinese enterprises?
Yeah, it's a really good question. I think so. There are a lot of things which 5 years ago or 10 years ago we would have viewed as efficiency drivers in the global economy, right? So global supply chains, global financial markets. These are, from an economic perspective, sources of efficiency, drivers of productivity gains, things which make the pie bigger and make everybody better off, right? Now, really just in the last couple of years, the lens has shifted, right? And we've moved from a kind of economics, how can we make the pie bigger lens, to a kind of geopolitics, how should the pie be divided up lens. And as that focus has shifted, things which were regarded as sources of efficiency have become sources of vulnerability, right? So our supply chain relies on China. That's potentially a source of vulnerability in the eyes of security hawks. We participate in the same dollar-dominated global financial markets. That's a source of efficiency, but now from the perspective of China, potentially also a source of vulnerability because of concerns about sanctions. So the way in which we think about these international networks, whether it's a supply chain, whether it's dollar financing for trade, has shifted, right? Now, the concern, the way I'm not part of the U.S. administration. I don't know how they think about this. But if I was sitting in the U.S. administration and I was thinking about this, I would probably think to myself, yes, the dollar system is a instrument which we can use to impose sanctions. At the same time, when we do that, we make it less appealing for people to use the dollar system, right? So it's a weapon, but when we use the weapon, we hurt ourselves as well. So can we do that against North Korea? Yeah, we can do that against North Korea. Can we do that against Tajikistan or some other Central Asian country? Yeah, probably. Can we do that against China? I think that raises some questions, right? And the point that you made about the rapid shift from dollar invoicing to Yuan invoicing in China-Russia trade, I think that's a specific example. And I would be surprised if you saw such a rapid shift, for example, in invoicing between China and European countries, for example. I think that would be something which would be much harder to achieve. But I think it illustrates how, if there's even a fear that the dollar system becomes weaponized, then there's going to be a response from China and other people, and that's going to be a response that weakens the dollar system.
Okay. From what you said, I would love to ask you a little bit more about how far do you think the American reaction to Chinese economic development is rational and it's economically based, and how much it's sort of emotionally based? Because much of what you said points to the idea that actually many of the decisions are against the economic rationale and are purely politically motivated. Could you tell us a little bit more about this?
So, I'm in a slightly unfortunate position because, as you might be able to tell from my accent, I'm not from China and I'm not from the United States either. So I shouldn't delve too far into the American psyche. But I think it's a confluence of factors, right? There are economic concerns. If there is forced technology transfer, if there is IP theft, then these are economic problems, right? They create a disincentive for US firms to invest in innovation because they are worried that that innovation will be stolen by a foreign country. And so they won't get the benefits from it. At the same time, I think there is a kind of a visceral kind of societal political concern about what happens when the US potentially is not the biggest economy in the world anymore, right? And I think you have these two things coming together and shaping US policy. In fact, I think one way to think about the trade war in 2018 and 2019 is that was a period where the economic concerns were at the forefront, right? Yes, relations between China and the US were bad and there were tensions, but the lens was still an economic lens, right? Let's improve market access. Let's improve protections for intellectual property, and that will form a sustainable basis for continued positive commercial relations. I think what you're seeing now with speeches from Secretary of State Pompeo and others is actually some of the political concerns coming to the forefront. And what I think the concern is, well, actually, if this debate is going to be driven by the kind of the politics and the geopolitics and the question of who's the biggest economy in the world, and so who has the most power in the world, then that potentially could mean that tensions continue to rise.
Okay, so let's shift focus to COVID-19 topics and their consequences. So the pandemic and the aid programs applied by different countries have changed our thinking about debt. It turned out not to be the worst problem. Moreover, supporters of the modern monetary theory prove that the economy has huge room for fiscal policy. What is your view on debt matters in this context?
Yeah, so that's a great question. So I think so this is a bit of a confession, and this is a confession, and it doesn't make me sound super great, but I have not spent much time grappling with modern monetary theory. However, my sort of very shallow understanding is that one of the kind of the key takeaways from modern monetary theory is that governments running large deficits to pay for social priorities, even with some element of central bank financing, is okay and indeed good, as long as you can pull it back before you see inflation, right? And in a sense, that's what China's been doing for the last 30 years, right? It's not deficit spending because China does it through state banks and state-owned enterprises, but it's still kind of quasi-public spending because the state banks and the state enterprises are, to a large extent, acting in accordance with the wishes of industrial planners, right? So China's government, the National Development and Reform Corporation, the Fagai Way, has a master plan for society. This year, we should all invest in steel. Next year, we should all invest in ships. The year after that, we should all invest in electric vehicles. And state-owned banks and state-owned enterprises are making that vision happen. And that is resulting in the creation of a large amount of debt. But as long as that debt is not inflationary, and as long as it's financing things which we regard as kind of socially useful, then it's okay, right? So I'm sure that the experts would find 20 different ways that was way too simplistic and missed all the important details. But in a sense, I think you could say that the rise of MMT and that kind of theory as a way of thinking about what we should do in America and Europe, in a sense, is capturing the reality of what's already taking place in China.
So, according to Bruegel's think tank data, so far Germany allocated nearly 50% of its GDP to support the economy. France, about 30%, UK, a quarter, while Japan, more than 20% of its GDP. In relation to these figures and the earlier bailouts launched by China in 2008, the present Chinese aid program seems small. So I would like to ask you about the potential effectiveness of the Chinese government's rescue package. Is there anything unique about the solution adopted by China?
So first, I want to congratulate Bruegel for his successful transition from medieval painter to modern policy analyst. I can't think of any other medieval painters that have made that transition so successfully. Certainly, Hieronymus Bosch has never made it as an economic analyst. So coming back to your question, I think that China has some policy instruments which are not available to other countries, right? So in China, because the banks are state-owned, the government can say to the banks, okay, this quarter, you will not collect repayment on loans from small businesses, right? And you will not collect repayment from any businesses in Wuhan, which was the epicenter of the coronavirus. And they can say to state-owned enterprises, okay, this quarter, you will not let any workers go, and you will accelerate your investment plans. And because of that, China can achieve kind of stimulus outcomes without cutting interest rates or announcing a massive fiscal deficit, right? So that's the first point. So they just have, relative to Europe and America, they can deliver stimulus through different means, right? And means which are less visible. And then the second thing is China was actually quite successful in containing the virus, right? There are many countries, the United States, India, Brazil, the UK, which had much worse outbreaks than China, and outbreaks which lasted longer. And so they needed more stimulus. And China's outbreak, they contained it in terms of geography and in terms of time relatively narrowly and relatively quickly. And so they needed less stimulus.
Mm-hmm. So I would like to return to the financial system in China. So the size of China's financial services market is $47 trillion. However, this market was on the negative list. This means that foreign businesses were limited in this area. So thanks to this, foreign firms have only a tiny slice of the most sectors of this market. Significant changes are currently taking place in this sector. It's probably one of the last market wider open to foreign companies, to foreign competitors. So why do you think we had to wait so long for it to open?
Okay, so China looked at the experience of Asian countries in the Asian financial crisis, right? And Korea and other countries, they had followed the lesson of what was called the Washington Consensus, right? Privatize your economy, open your capital account, open your trade account, and the marvels of the market will generate growth, right? And that works fine in theory. But what Korea and Indonesia and other Asian countries discovered was when you open your capital account, it's great when the money's coming in, but when the money goes out, that can be a crisis, right? And so China learned from the experience of other Asian countries in the Asian financial crisis, and they did not open their capital account. In China, they talk about foreign speculators, and they use the term big financial crocodiles, 大金融鳄鱼, I think in Chinese. And they saw what the big financial crocodiles did in Korea and Indonesia and Thailand, and they didn't want the big financial crocodiles in China. So there's a kind of a big sort of powerful historical reason why they opened their financial sector slowly. Now, if you open your financial sector slowly or you keep it closed, you have more stability, but you also have less efficiency, right? Because there are less, because money can't go offshore, money can't come onshore, and so you have more potential for bubbles. You have less competition in your financial sector, so your domestic firms do not become more productive. And so even as they attempt to retain the benefits of stability, China has moved in more recent times towards opening its financial sector. So now we have the caps on foreign ownership of financial firms being removed, and we have controls on cross-border capital being relaxed. And so we do now have more foreign firms going in, and we have more foreign money coming in, and we have more domestic Chinese money going out. Over time, I think this is actually going to be a positive for China, a driver of efficiency gains. And if you think about the deleveraging agenda, essentially what China has to do is generate more growth in the real economy with less expansion in credit. And how do you do that? Well, you need a more efficient financial sector, which can allocate credit, allocate funding in a more efficient way. And the progressive, gradual, cautious opening of the financial sector, I think, is going to be an important part of that process.
Okay, when we are talking about China's financial markets, it's hard not to mention the dynamically developing capital market. The stock exchange in China is one of the most important channels for the accumulation of savings by ordinary Chinese citizens. What are the prospects for the Chinese stock exchange, in your opinion? Can we expect Hong Kong to defend its position as one of the most important financial centers, or will it lose its place to, for example, Singapore or Shanghai?
Yeah, that's a good question. I mean, a different way of thinking about the big picture for China's economy and financial markets is that China has had a debt-financed economy, right? But debt finance is only one option, right? You can also have equity finance. The US is a much more equity-financed economy. Companies sell shares. Japan, Germany, China, they are more debt-financed economies. Companies borrow money. So how can China address its problem with deleveraging? Well, one macro solution is to move from debt finance to equity finance, right? To have perhaps some companies which have borrowed a lot of money do debt for equity swaps. Hard to do, but not impossible. And going forwards, to have more companies raising money through issuing equity rather than borrowing from the banks. So I think that's going to be a big trend for China going forwards. And I think it's going to be a structural factor impacting the Shanghai market, the Shenzhen market, and the Hong Kong market.
Okay. So maybe the last question. We start our conversation with your book, and maybe let's end with the topic of the book. So China in a relatively short time created many champions brands that are on the Fortune Global 500 list. If you were to write another book about Chinese champions, which company would you write it about and why?
That's a really good question. So actually, let me tell you a story about my personal life. So on the day my book was published, I said to my wife, "My book is out today. Let's celebrate." And my wife looked at me with kind of barely concealed anger, And I said, why are you angry? This is a great day. My book has been published. And she said, yes, it is great. But now I'm remembering all the times when I had to look after the children because you were working on your book. So I think the first thing I would have to do if I was planning another book on China would be to consult a divorce lawyer because of the potential consequences for my personal life. But if I did decide that was the right way forward, then I think one of the most exciting innovations in China right now is in financial technology, right? So you have enormous growth in e-payment in China. I'm sure you visited China and you know that you use your WeChat or your Alipay to pay for everything, right? WeChat, Alipay. And what that means is that the companies which own those e-payment systems have this enormous reserves of data, right? They know how much money all the consumers have and where they spend it. They know how much income all of the small businesses have and where it comes from. And that is a tremendously powerful resource, right? It could be used, for example, for credit risk analysis. Banks don't like making loans to small businesses because it's hard for them to price the risk associated with those loans. But with the huge reserves of data that come from the e-payment market, they should be able to price that risk more accurately. So we'll see how things play out in the next 5-10 years. But I think that enormous growth in e-commerce, e-payment, clearly it's been a huge positive for companies like Alibaba and Tencent, which kind of own the networks. But I think actually it's also going to significantly reshape how China's broader economy and broader financial system work and create a lot of opportunities as well.
China definitely is a leader in this area, and we'll probably see a lot of changes globally connected with Chinese experiences in managing these huge systems and the huge data that they generate. Yeah. Tom, we would like to thank you very, very much for your insight. It was really fascinating. Thank you for sharing with us also a lot of information from your book. I think it will encourage the viewers to have a look and read it. And we are waiting for your third book. Please negotiate with your wife. Maybe after the next few years. Don't do it now, but we'll be definitely expecting it. And I hope it can be maybe, like you said, about big data and how China deals with it in the area of finances.
Well,
thank you very much, Tom, for the meeting, and greetings for your wife and children. Yeah.
Thank you very much. Thank you, Marcin. Thanks to Zbigniew. I really enjoyed the conversation, and I look forward to continuing.
It was great having you with us. Thank you.
Bye bye.